I'm just kidding.
Oh,
Hey, we are live. We are live. Welcome, everyone. Welcome, everyone, to this latest edition of Carolina Retirement Planners Happy Half Hour. This is, in fact, the October 14th, 2021 edition.
oh my
And
goodness.
what number is this? What are we up to now? 60 what?
68?
68?
68?
67.
Oh, 67.
67. So for
Wow.
those of you who are here for the first time, some introductions. With me on the screen is Sam Shakavage. She is my daughter and partner in Carolina Retirement Planners.
Hello?
I am David Shakavage, president and founder of Carolina Retirement Planners. We are here. I am sitting right now at 7th and Market in Wilmington, North Carolina. And for the last 67 times we have gotten together. With COVID, we couldn't have the normal live function, so we started having a half-hour session every Thursday, and it has been very popular, and people have really enjoyed it. And if I always like to remind you, if you're here, go into the chat, say hi. We won't know you're here unless you're in the chat. I can see Bob is here. It's good to see you again. I haven't seen you for about an hour or two. I talked to Bob earlier today. Al is here. That regular Teresa is here.
Amy's mom. And speaking of Amy, Amy is always with us each and every week, making the magic behind the scenes happen. Amy, our director of client fun. So thank you, Amy, for always being here.
Hello. I'm glad to always be here. It's kind of like something fun. I always look forward to this. It's turning into my favorite day of the week. Happy
Yep.
little Friday. I love
My,
it.
It is.
my
It's like
favorite
nice
too.
for Thursday. It's like,
It's good.
And Amy's the one that also figures out how to do it in Zoom, move it into Facebook, get it to YouTube, and all that digital magic that seems
All
to
the
make our
wonderful.
world operate these days.
Yeah. I'm getting
I
back
can
to
also
work.
I also see Lynn is here, and Lanny, another regular, is here once again as well. And there's a few rituals we always have when we do this. It being a happy half hour, I always like to poll everyone what you're drinking. In fact, you can always say and let us know what you're having. I'm having my usual herbal tea. I know it doesn't look like it. It's not rosé. It's herbal tea. I found that if I drink something too much stronger and I'm doing something fairly complex as we go on, things can get garbled. So, but I promise you, I will make up for it later tonight. Sam, what are you drinking here?
nothing exciting. A grapefruit LaCroix.
A grapefruit LaCroix. How about you, Amy? Are you drinking anything important?
Yeah. Well, I wouldn't call it important, but I did grab a Bud Light Lime.
A Bud
Yeah.
White Light Lime.
That's
Okay.
Yeah. I'm not mad at it or anything. I mean, it's like a summery beer, and it was a nice day. Although I haven't been outside since this morning, but it felt suiting. So I was like,
Some of us purists might challenge if beer is the right term for that, but
okay,
still,
well,
it
all right,
does.
yeah.
It's okay. I see we got
Beverage.
Ricky here, Randy here, Eric is
Eric.
here,
And Ed and Renee.
Ed and Renee are
y'all.
here. And
It's also today is National Dessert Day, which
that's
is,
right.
we always talk about what day it is, and sometimes we get some real weird days, but National Dessert Day, I can get on board with that. In fact, when Amy told me what day it was, I immediately texted my husband that it was National Dessert Day in hopes that he would be bringing something really great home.
You're just waiting to get your
for us.
you're hoping to get your just desserts, right? Yeah.
Absolutely. I'm hoping that we can partake in National Dessert Day. My
Well,
husband
good
does
fun.
love a good dessert. So I'm excited to see what he comes up with, hopefully. Actually, and hopefully I'm hoping that I'm lucky. I know that in the email that Amy sent out to our listserv, she asked people what their lucky numbers were. And so we saw some of those responses come in, and I was interested to see what people's lucky numbers were. Dad, do you have a lucky number?
No, I have no lucky number. I can't say that
What?
I do.
You got to make one up. Just pretend. I mean, just pull one out of your magic hat or
Okay,
something.
well, how about 3.141592654?
Well, that would go well with
Yep,
dessert
there
day.
you go.
With
Oh, it does go with the dessert day, doesn't it?
my lucky number is 3. It is 3.
My
Uh,
lucky number is 23. Magic, like, yeah. Well, it's Michael Jordan. So, Chicago Bulls, and then he's from here. It's kind of
Ah.
fitting. And I
Went to
played it
my-
in Vegas. It works, yeah.
I think I went
Why not?
to every school that Michael Jordan went to.
Really?
Yeah,
That's interesting. I like that. Yeah.
went to all of my primary schools up through UNC. Go Tar Heels.
I have a friend whose grandmother used to babysit him. So, small world.
Oh, that's very cool. That's very cool.
I also see that Patricia Jean has joined us. Jean has joined us with Debbie and Nadine. Good to see you, Rick.
Rich, is
Rich
here.
rather, and
Rick.
Rick and Marcy are here, and Alexander. Hi, Alexander.
Alexandra.
Oh, Alexandra, boy, yeah, I need,
You need your other glasses.
Maybe
Get
I
my
need
other
something
glasses.
stronger in that drink.
I actually have a special set of glasses, so just tune for the screen above the desk that I'm at. If those of you who've been to the office know I got a big table with a big screen above, and we usually sit and look at it. Since COVID, I've usually done far more Zoom calls here than anything else. But yeah, so this is good. But what is our topic today? What are we talking about today?
Oh gosh. Well, this morning, we were doing our promo. We're talking about a number, a specific number, aren't we? It's a 37 point, an indicator.
Yeah, today.
Market indicator.
Hang on, something's a little weird here. There we go. That's better. I don't know what was going on there. Really the topic today is the market overpriced? Where are we with the market? Is it due for a drop? What's the future look like? That's the question. Get that question a lot. And
Well, at the end of last week, wasn't that one of the takeaways from last week? All of the people who are making predictions about the next 10 years, all of them could agree that the foreign markets were going to be outpacing.
yeah, last week, for those who weren't here, we did the battle of the crystal balls, and we looked at different, the Black Rocks and the Morning Stars and all the big companies, what they were predicting the markets would do. And one thing they did agree on is that other countries are probably going to do better than us over the coming decade. And so I thought it might be nice to kind of dig in and say, well, how do we know? And in fact, there are some predictors, some well-established and generally respected tools that we can use to judge is the market overpriced or not. And I want to go into one of them in particular right now and give you a little history behind it. And one tool that's often used in determining is the market, how valuable, for instance, an individual stock is, how overpriced or how good a deal it is to compare the price of a stock with its earnings. In other words, what it pays. So let's say we have a stock, Sam, that sells for $10 a share and it pays its earnings every year, its dividends are $1 a share. If we look at the ratio of that 10 to 1, what is the price to earnings ratio of that stock?
10?
10, yeah. I don't ask difficult questions on Happy Half Hour.
I get you
So,
were.
in fact, it's not even dollars. It's just, it's a price to earnings ratio of 10. So
You did tell me you were gonna ask me some difficult division.
Yeah,
Yeah, I
you
did.
You
I
kinda
did. I
were-
warned
you kind
you.
of being
For
tricky
this.
earlier.
one simple way to think about this is if I bought that stock for $10, it would take 10 years before it paid me enough back in dividends to make up my original investment, right? It's kind of what that means. Now, let's say we had another stock that cost $20, but it too only paid $1. What would be the P to E ratio of that?
20?
20. So you could see it would take me 20 years to get that back. It doesn't look as good. And if I had a stock that cost $30 and paid me $1, well, it would have a PD ratio of
Oh gosh.
30. It would take 30 years. And if I had one that cost me $82.57 and it paid me $1.28, well, I'm just kidding. So you can see that the higher the price to earnings ratio, the longer it took you to get the company's profits to pay you back for your investment in that company, maybe the higher price or overpriced that stock would be. Okay? Well, we can do the same thing for the market as a whole. We can total up all the stocks in the market and see what their price is, and we can divide it by all the earnings, and we can get a test for the market to see if the market's, how it's priced to earnings. Is it overpriced now? We can add them all up. Here is the problem with that though. It's noisy, there's a lot of little cycles up and down that may not reflect the long-term, whether the market is really overpriced or underpriced in the long term. So how do we get rid of these cycles? How do we get around this noise that exists in the market?
I have a feeling you're gonna tell us.
That brings us to this gentleman, Robert Shiller. He is one of the guys that came up with this. But before I get to him, I want to kind of look at a little time period in history. This is the year 2000 here. Remember the turn of the millennium. Here is 2005. Here is 2010. And here is 2015. Now, Sam, what did the stock market, during the 1990s, the stock market was really good. It headed straight up. What happened in 2000?
Well, the stock market fell drastically.
Yeah, how far did it fall?
About in half, 50%-ish.
I think it fell about 50%. And by around 2003, it was down to half. And then it came back up. And it was actually kind of got back up, and on October 8th, 2007, it hit its new high. Now, what happened in 2008?
Well, it fell again.
It fell again. And how far did it fall in 2008?
Even further. I think this time a little bit more than half.
Yeah, I think it was down like 55%. Yeah. And then it came back up, and by about 2013, it had gotten back to where it was 10 years earlier. Now, I want us to concentrate on a couple dates here. One of them is 2000, and one of them is here in 2005. okay? And Robert Shiller, this guy, Robert Shiller, he wrote a book called Irrational Exuberance. And I actually went to Amazon and I bought some old copies of the early editions. He's had 3 editions of this book out. And this book came out in 2000. It came out the very month the market dropped. And he was talking in this book, and he has lots of arguments as to why the market is overvalued. Irrational exuberance is something that Alan Greenspan, I think the Federal Reserve Chairman, said in 1996 when things were going up. But he popularized it too. But Robert used it for his book. And when everyone else, and I remember at that time, I was still, I think, consulting with some fancy international advanced profit analysis consulting people. And a lot of the people I'm working with were very enthusiastic, smart people, but they didn't see the bubble. He did. He was one of the ones that predicted that bubble. Now let's go to 2005. And this is an actual copy of the 2nd edition of that book. And I don't know if you can see this little bubble here, but it says with new material on the real estate bubble. Now, in 2005, people didn't see real estate as a bubble. Most of them were still saying, wow, this is great. I don't know if you remember in 2006 and 2007, people were buying houses on Carolina Beach and holding them for 3 months and flipping them. Remember that? But he was predicting the bubble before anybody else, and he did that in his 2nd edition. If we go back now to this, why is it going? If we go back now to this chart, we'll also find out that in 2013, he won the Nobel Prize in economics. So, and what did he win that prize for? This is a smart guy. He's predicting these ups and downs, and he won the Nobel Prize because he took and created what is called the CAPE ratio, C-A-P-E, and it stands for cyclically adjusted price to earnings ratio. He looked at this P/E ratio and he says, there's information there, but you just can't take it at a given moment. And what he did is he took a 10-year average earnings, he adjusted them for inflation, and then divided by the current. In fact, the instructions are down there. He took the earnings over the last 10 years. He adjusted them based upon the consumer price index. He added them up, divided by 10, and then divided by the current price of the S&P. And so he kind of took the noise out of this equation. He adjusted for the cycles. And it's been known as the CAPE ratio, sometimes the Shiller index. There's a few names it goes by. And what was really neat is he went back and got data that goes back to 1871. And on his website, if you Google him, you'll find a website. It's a really ugly website, but buried in there is his spreadsheets with stock market data. He went back to, the early stock market and got the data from 1871 on. And he calculated over all these years what this CAPE ratio was. How did this ratio look over time? Now, this is from a website here that you can go to. This website calculates it up to the minute. And as of yesterday, the number was 37.69. You can see it here. Now, the average of this over time is about 17. So the average over all these years, and you can see he's down here into the at 1880, The average is about 17. It's kind of interesting if we just draw another line here at 25. If we draw another line at 25, we find out that, boy, there's only been 4 times in history that we've gone above the 25 level. One of those was 1929, the Black Tuesday, the market crash in the 30s, 26 years of down markets. I don't think anybody on the call was around then, but you've seen the black and white movies of the soup kitchens. Another time was 2000. Here in 2000, the dot-com bubble we just looked at. The third time was about 2008, the real estate bubble. And the fourth time, well, is now. So, boy, there's some data here that kind of says, using this criteria for whether a market is overvalued, boy, there's a lot of indication that it is. And it doesn't necessarily mean we may have a market crash, although it sure seems to correlate with them. But it does indicate that, if markets are overpriced now, it certainly means that in the future, we may not see the gains in the stock market that we've seen in the past, that we've already gotten those gains. And it's just whether it stays level for a long time or whether it drops real fast, that's largely an unknown, but this is an interesting piece of data here. In fact, it's kind of interesting. If you look at today's level, it's higher than it ever was in history, except once, and that's the big dot-com bubble.
Wow.
So, this number should be a little some worrisome. Now, I've talked about this I remember standing in the City Club with a group of, when we had luncheons there before COVID, with 50 clients there, and I was talking about the same thing, and it still hasn't burst. We largely have been pumping a lot of money into the economy, but it's just interesting. Now, I was wondering, well, are there any other smart people that have come up with indications? This is a guy named James Tobin.
That's
not as well known, but he won a Nobel Prize in economics in 1981. And he came up with a measurement where he says he takes the total price of the market and he divides it by the cost of the replacement cost of all the companies. So he says, is the market worth more than it would cost me to replace all the companies in it? Apparently the federal government tracks enough that you can do this, and you can see right now we're at an all-time high based on his. And other high points were, well, again, 1999, just before the dot-com bubble crashed, and you can see another one down here in 1929. So another place number that gets you. I'm pretty sure everybody on our happy half hour today will know this guy. Mm-hmm. This is Warren Buffett. He is the Oracle of Omaha, recognized as one of the best, brightest investors of recent times. And he has his own measure. And what he does is he takes a ratio of the total US stock market, what the stock market is valued, divided by the gross domestic product. So he says, what's the value of the market divided by the earnings of the market? And you see that now, as of a couple weeks ago, it was at 211%, and it's 69% higher than the all-time mean or the regular mean. So, and if you read about Buffett, he has in last few years been holding back a lot of cash, and he cashed out of a lot of things this past year, airlines and restaurants, but another indication that, maybe the market's overvalued. So, I just thought it's nice to look at this. Last week we looked at predictions and crystal balls. This year we're looking at some of the leading, Nobel Prize winners and also stock market gurus, recognized stock market gurus, and the things that they look at and seeing that it's there too. So that's kind of our piece. You know, if you are interested in learning a little more, you know, if you say, Dave, what do I do about this? Those of you who are clients know we have strategies. We have some of the money in the market. We have some of the money in protected growth where it's immune to market risk. We, even in the market, we have a variety of things, US and foreign markets, and we have things that move in and out and adjust with the market, and we balance it. So we put this together so that we can weather a storm if it comes, and maybe even when it comes, because, you know, it's very likely that most of you listening will probably see one or two or more drops, 50% kind of drops in the market in your lifetime. It just might, certainly it's possible enough you might expect it. So, but we do have a report. If you'd like to get a copy of this, it's Writing Market Highs, Take Action Now to Help Protect Against Future Volatility. Amy, how can they get this report?
Oh, it's so easy. All they have to do is send an email to info, at carolinarp.com, and we will print it out for them and put it in the mail and send it to them.
And
Super
we'll mail it to your house on real paper. We can email
Real
you
paper.
a copy, but it's just phone. The other thing I always like to offer is if you have some questions, particularly if you know, our clients we usually deal with our regular reviews, but if you're just on this as a visitor, you can go to the website carolina15.com. You can book a 15-minute phone call with me, talk about whatever you want. Last week, we talked about how we can analyze someone's portfolio and see if it would go down in 2008. You know, if 2008 happened again, how much you lose. That's another thing we offer. And we offer it at no cost for those of you who laugh at our jokes here on the Happy Half Hour. So a little bit of more information here on how you can get in touch with us and learn more. So I hope this was helpful. Before we get to our drawing, we should talk about next week.
Ooh, next week is exciting.
Next week is exciting. Next week,
Very
who do we have next week, Sam?
Next week, we have a special guest. We have Tom Ciamatas. He is the Chief Investment Officer of AE Wealth Management, and he's going to be joining us.
And if you when you listen to Tom or watch him, you'll soon realize he has a lot of experience. He's been over a lot of rough ground, and he's got this gruff New York, accent, and he tells it like it is. And he's going to talk to us about something that's on everybody's mind right now: what inflation and what interest rates may mean to the market. And
he's going to give his take on what the next 3 months are going to hold for us, or may hold.
Yeah, so you want to be there and tell your friends and make yourself an extra stiff drink for Tom next week at 4:30.
Definitely.
So.
Mm-hmm.
Okay, well, what do we always finish with? Wow, there's a lot of entries today, boy.
I know. We've been getting a lot of entries lately. It's been really great. And I like to give them I usually give them a good mix before we even do this, but I like to give them an extra good mix. So for those of you who this is your first time seeing this, each week during our Happy Half Hour, we give away 2 bottles of wine in a wine raffle. And to get your name in my jar here, there are several ways to enter. Each week we have a Facebook event, and you just have to, if you have a Facebook account, then you just, respond that you are going to our event. If you invite friends, then you will get extra entries for each friend that you invite. If you are on our email list, sir, we send out a few emails throughout the week to let you know what we are going to be talking about. And if you respond to those emails, we will give you an entry as well. And if you forward that email to a friend and let us know about it, then we will give you an extra entry for that. So without further ado, our wine winner for this week, who's going to win 2 bottles of wine shipped directly to your door from Fermental Bottle Shop. They're located in Ogden, a really cool family-owned bottle shop. Our winner this week is Susan R. So, and I think I saw in the emails that it's actually her birthday today. So, and she's,
It is her birthday today. And
I believe every week.
yeah,
So
she,
she's
you
gonna
know,
be
she is one of the few, wait, I'm gonna have a, she is one of the, there's only a handful that have been entering every week since the beginning that haven't won yet. There's still a couple. She is one of them. So
wow.
So congratulations,
So
Susan.
congratulations.
Yeah.
It is, you know, persistence pays off, and I'm glad you've enjoyed our little get-togethers. It has been really fun. I
love it. I
you
love
know, and as always, you have something you'd like us to cover, send an email in. Maybe we'll add it to a future one. And you know, it's been good. I hope this was helpful. It's kind of a little bit of a complicated topic, but I try to make it simple and accessible and understandable, and hope we succeeded at least somewhat with that. So
I enjoyed it. It was good.
so next week, Tom Ciamatis,
Ooh.
Chief Investment Officer. You don't want to miss that. Tell your friends, you know, share us with your friends. Tell us you shared it so we can get extra entries in. And
I want my wine jar full next week.
Ooh,
Yeah.
Very good. We'll see you there.
Hope you all have a great weekend, and we'll see you next Thursday.
Cheers.